Hi, I'm Shashank Bhargava, and you're listening to Three Things, the Indian Express news show. In this episode, we talk about foreign lawyers and law firms being allowed to operate in India. We also talk about the parliament being adjourned once again due to the ongoing tussle between the BJP and the opposition. But first, we talk about Credit Suisse, Switzerland's second largest bank, which was sold to UBS, its rival, on Sunday. This deal was actually brokered by the Swiss government and the country's regulators in order to contain the ongoing crisis within the bank and so that it does not spread to other countries. It is important to note that this is in fact the third major bank to collapse in just the past 10 days, the other two being the Silicon Valley Bank and Signature Bank, both of which are based in the US. In this segment, we speak to Indian Express's Udit Misra about the reason behind the Credit Suisse collapse and the larger concerns it raises about the financial markets. Udit, Credit Suisse is one of the oldest and historically one of the most influential banks in the world. Could you give a sense of just how big it is, or rather was? Should we put it like that?
Yes, today is the day when this confusion can happen. But as things stand, Credit Suisse has now been sold to UBS, which is also a Swiss bank, slightly bigger than Credit Suisse and a long-time rival. And Credit Suisse is one of those iconic banks. It's actually very much like a Lehman Brothers in that sense. It's a 166-year-old bank. And, I was just looking at the data. It has been losing ground since the great financial crisis of 2008. And that fall has been quite rapid. But even now, when it has just been sold, it had around $575 billion of assets under its management. Basically, this is the amount of money that it has given out as loan and on which it would earn some income. And this number was around $1.6 trillion as early as 2021 end. So, the Credit Suisse has also been losing ground quite rapidly. And in 2021, when I was writing that story looking at Credit Suisse, it showed that it was down 60% of what it was in 2008. So you can understand it's one of those iconic big banks, too big to fail kind of banks, and has lost a lot of ground more recently.
Okay, so you mentioned that Credit Suisse's downfall started after the 2008 financial crisis itself. But what were the main problems that the bank had been facing since then?
So, 2008 financial crisis wrecked a lot of banks and created a lot of problems for existing big banks. And those parts are very well known. But what has happened is that since 2008, Credit Suisse hasn't really conducted itself very well. And to put it very simply, it has taken very risky bets in trying to put money in ventures where it has failed to get returns. It has been accused of fraud. It has been accused of bypassing prudential norms. So just to give an example, some years back, there was this firm called Greensill Capital. It came up and Credit Suisse lent almost $10 billion. It's also directed a lot of its customers to invest in Greensill. And the idea with Greensill was that, often there are delays between suppliers and clients in terms of funding. And so Greensill said, we'll be an intermediary and we will tide over that gap. And that is how it would expect it to make money. And Credit Suisse thought it's a great model and invested a lot of money. In 2021, within a few years, Greensill went bankrupt and Credit Suisse lost $10 billion. Now, $10 billion per se is not as big an amount for a bank like Credit Suisse, but this creates a confidence problem. It shows that the bank was not very clear about how it went about investing money. Similarly, there was something called Archegos Capital Management in the same period. It was a hedge fund and Credit Suisse lent out, I think, $5.5 billion or something dollars. And that firm also went kaput and Credit Suisse lost another $5.5 billion. So there were all kinds of these problems where over time, what happened was that Credit Suisse lost money. As a result of that losing money, it had to then pay higher interest rate to raise more funds. And in all this process, investors lost confidence. So its share prices kept falling.
And was there a major incident that finally led to the Swiss authorities stepping in and brokering this deal between UBS and Credit Suisse?
Right. So, last year there was a lot of talk about, having a new management and trying to redo Credit Suisse. But it came to light later on in March this year that even that management accepted that it was making inaccurate financial statements last year. So it's a crisis that just kept deepening, and it reached a point where, in a scenario where global confidence in banking is low, it became very difficult to save Credit Suisse. Its stock prices kept plummeting. People kept pulling out money. Just the last week, $10 billion had been pulled out by depositors. According to Credit Suisse itself, I think $100 billion was pulled out in 2022. So a lot of money was being pulled out. And when this money is being pulled out, it basically means that the bank will then struggle to somehow pay it back. It will have to break or sell off its many investments, and often at losses, to furnish this money.
Yeah, and the Swiss government has now said that it would provide more than $9 billion to stop the losses that UBS could incur by taking over Credit Suisse, and that the Swiss National Bank will also provide more than $100 billion of liquidity to UBS to help facilitate that deal. Now, these are obviously large amounts, but this is being done so that this crisis doesn't become any bigger, right? That there are no global repercussions to this crisis.
Yes, I think the main challenge from policymakers' perspective or the central bank's perspective across the world is not so much the fall of one particular bank. It is the fear of contagion, the fear that the crisis of confidence that right now afflicts one bank or another bank becomes an endemic thing. Everybody starts wondering whether their bank, which might be functioning absolutely fine, which may not have any problem, is also likely to falter. And this is something that we saw in the Silicon Valley Bank just recently, that a bank run can happen if people panic. If people believe that their funds are not safe in a particular bank, all the depositors can go to the bank in one day and actually ask for the money back. And that may actually bring down the bank, even a well-capitalized bank, even a big bank. And that is how bank runs happen. So the regulators are trying to avoid that kind of a scenario.
Right, they're essentially avoiding the crisis in one market to spread to other markets. And you mentioned the Silicon Valley Bank, where authorities similarly stepped in to contain the crisis. But do we see any other similarities between what happened at Credit Suisse and what happened at the Silicon Valley Bank?
So, obviously these were two very different banks. Credit Suisse was a much bigger bank than Silicon Valley. Even when it has now plummeted or collapsed, it was 3 times the size of Silicon Valley Bank. Credit Suisse catered to a very different clientele, a much more diversified clientele, had a much longer record. Silicon Valley Bank was a far more focused tech startup kind of a bank. But at the heart of it are 2-3 things. One is mismanagement of funds, not knowing where to put your assets. Banks typically use the deposits that we give any bank and then lend it out to different purposes. And it's for the bank to figure out, where do you lend this money to? If you lend it out to a very risky business, then it can create problems because that money may not come out. If you lend it out to a project which is a very long-term project, then you may run into trouble, as Silicon Valley Bank ran into, where a lot of people want money in the short term and you cannot take that money out because you've lent it for a long term.
Yeah, and with the Silicon Valley Bank, they also pretty much put all their eggs in one kind of basket.
Exactly. So lack of diversification also was a very crucial bit. So we are seeing lack of prudential norms being followed, good management being followed. And then with Credit Suisse, we've had, in the recent past, history of kind of fraud, not explaining what their true monetary condition is, financial condition is, and often sort of misleading the depositors. So all of that has sort of built into a crisis of confidence. Even though the banks are very different in the way they went about, the essential problem is the same: mismanagement and lack of prudential norms.
And Udit, we have now seen the failure of 3 major banks within the span of 10 days. What do you think that says about our current financial institutions?
So, what is happening currently is something that is seen in history and repeated many times over, is that when central banks conduct a loose monetary policy, which is to give money at a very cheap interest rate, very low interest rate, and if it does that over a long period of time, what happens is that the market is flooded with money. It's very easy to borrow money. When you have very little cost associated with borrowing, you tend to over time get reckless with your investments. Banks get reckless, businesses get reckless, all kinds of unsound ideas get funding. And what happens is that at some point when the trigger starts, for example, in 2022, interest rates had to be increased because inflation was high and that interest rate spiral was really sharp. Many of these bets that were taken come apart. And then you have the reverse flow where you have one thing failing after another. And then people realizing, okay, we lent money out to a particular venture and that hasn't worked out. And other 3 ventures have also not worked out. So that is what is the worry right now, that the long period of cheap money policy that central banks across the world have followed is now being counteracted by central banks across the world very sharply raising interest rates. Now, there is very little time for banks and businesses to adjust to these two dramatically different conditions. And many of the banks and businesses are finding they're left stranded because all of a sudden the interest rates have gone up quite sharply.
Okay, so just to recap, what you're saying is that for a while the central banks lent money to other banks at a low interest, which led them to borrow a lot of money. And once they had a lot of money, it allowed them to take a lot more risks. But now, as a response to that, they have sharply increased the interest rates, and that will be difficult for banks and businesses to adjust to this sharp difference.
Yes. I mean, the whole dynamics of what makes a profitable business have gone for a toss because of the sharp increase in the underlying interest rate. What makes a great return, a business giving great returns, that definition will change as the interest rates have risen so sharply. Then that's why everybody's finding that it's not as profitable as they thought earlier. And a lot of money is then being reallocated.
Also, both in the case of Credit Suisse and in the case of the Silicon Valley Bank, we see authorities come and bail these banks out so that this crisis doesn't become big. But do you think it raises concerns about what the regulators were doing before these banks collapsed? Because mismanagement was going on for some time in both these cases.
Yes, obviously. I mean, I think this whole crisis will lead to some kind of a rethink again on the regulatory part. But as we've often seen, even in the wake of the 2008 financial crisis, what happens is that slowly banks and businesses try to lobby and get those regulations diluted over time, only to learn that lesson all over again. And frankly, 2008 global financial crisis was a good lesson to understand that, one or two banks may fail, but eventually the government or the regulators step in because they cannot allow the hit to happen to the common people, to the overall economy. So actually that creates a moral hazard also in the whole scheme of things, because if banks know that they are so big that they cannot be allowed to fail, then they continue to give risky loans because they know at some point somebody will step in. A bank itself is not a sentient body, right? I mean, these are individuals who are taking bonuses and moving on. The bank itself is just a commercial enterprise. It will be guided by those people and they may continue to make risky bets because they know worst comes to worst, the regulators will step in as they have done repeatedly.
And as far as the Credit Suisse crisis is concerned, does India need to worry at all? Are people here likely to get affected as well?
So in many ways, India not being as directly enmeshed with the global financial system helps India in many such moments. India is obviously, with every passing decade, India is more involved with the global financial system. So I'm sure that if this really blows up into a much bigger crisis than what it appears right now, then there might be some impacts. But, overall, India's banks, if we go by what the RBI's financial stability reports suggest, are in a decent shape. They've not made bad bets per se. In fact, in the last 3-4 years, our non-performing assets have come down. India had a massive problem for the most part in the last decade. And so hopefully it will not create that kind of a problem. Having said that, as I said, these are panic-driven problems. And you never know what sort of triggers a panic reaction.
And next we talk about the law. Last week, the Bar Council of India allowed foreign lawyers and law firms to practice in India, a move that it had been opposing for years. In this segment, we speak to Indian Express's Apurva Vishwanath about why the BCI chose to do so and how the decision could potentially change the landscape of legal practice in the country. Apurva, so begin by telling us, what does this decision actually mean for foreign lawyers and law firms?
So Shashank, this is the liberalization moment for the legal landscape in India. Though it is very regulated even now, the Bar Council of India has allowed foreign lawyers and foreign law firms to set up offices in India. They can practice law in India, although they will largely be practicing foreign law. But given how our landscape has changed and, multinational regulations and cross-border regulations are very common, it gives them foot in the door for practicing law in India.
So tell us, what all could foreign lawyers and law firms do up until this point, and what all will they be allowed to do going forward?
So from 2012-13 onwards, with the advent of BPOs, similar organizations which are called the LPOs did start to operate in India. They were operating in sort of a gray area, which is an uncertain legal regime. But in the Supreme Court, a lot of these LPOs said that they largely do non-legal work, which is providing secretarial assistance to lawyers, proofreading and things like that. So they still operate in India. But apart from the LPOs, in 2015, the Supreme Court also sort of allowed fly-in and fly-out practice by foreign lawyers, which meant that they could come to India, advise Indian clients on a one-off basis, but this couldn't have been a regular practice. The Supreme Court also read this in a very narrow way, so which meant that an Indian client could be advised by a foreign lawyer, say in an international arbitration, for example, on a particular issue, and that's it. But it couldn't have been a regular practice. But the Bar Council of India rules now changes that. Apart from fly in and fly out, which can still happen on the basis of reciprocity, which means if an Indian lawyer is eligible to practice in that country, a lawyer from that country can also register with the Bar Council of India and practice foreign law in India. The only big condition is, of course, that they can't litigate in courts, which means a foreign lawyer still can't appear before any court or a quasi-judicial body or a statutory body or any tribunal, but they can advise Indian clients on foreign law. They can do transactional corporate work. For example, a merger and acquisition or something like that can be handled by a foreign law firm in India.
Okay, so they will be able to operate, but like you said, only in these limited areas where corporate law, joint ventures, or intellectual property rights are concerned.
Absolutely. These are all domains where international law or foreign law would be applied. So it's only to those areas because, again, foreign lawyers would not have necessarily studied Indian law. So they cannot practice the way that an Indian lawyer does. But on these areas, and this is largely given how, there is a push to develop India as a global arbitration hub. So this would increasingly be important for Indian lawyers to engage in foreign law, to have that kind of expertise, to bring in that expertise from outside has become very necessary now.
And in what sense could we see this changing things for Indian lawyers and Indian companies for that matter?
So we see a number of startups or small businesses which set up offices in other countries. That means they have registered their companies there, but operate in India. So these would be one area where foreign lawyers would advise Indians on how to grow their business, how to comply with regulations in that country. Or take any multinational agreements, right? Arbitrations are increasingly becoming of that nature. If you have an agreement with a foreign company and the seat of arbitration happens to be in India, or if one of the parties is Indian, you would want Indian lawyers to engage with their foreign counterparts and, advise their clients on these issues. So instead of, just working on a fly-in and fly-out basis, that foreign law firm can now set up office in India with undertakings to the BCI that they will adhere to the regulations in India and practice in India.
So in one sense, it does make things easy for a lot of companies that are dealing with these areas, right?
Absolutely.
And what is the reason that the Bar Council of India was opposed to allowing foreign firms to operate all these years?
So from 2009-10 onwards, there has been a conversation, at least in courtrooms, about allowing the entry of foreign law firms. But the Bar Council of India had been resistant to this idea because they thought it would affect the Indian lawyers in negative ways. They thought it would drive Indian lawyers out of business or that there will be an unnecessary competition in the market. But with the current notification, what the BCI has done is address this concern in two ways. One, protecting the litigation space for Indian lawyers only. And two, the Bar Council of India also says that they will reserve the right to not register a foreign law firm if they feel that they are disproportionately higher in number compared to Indian. So they still want to regulate the competition in the market. They still want to control this space for Indian lawyers, but allow foreign law firms in a controlled manner. The notification itself, the statement of object and reasons itself, says that this is driven by a push for FDI and to make India a global arbitration hub. So those are the factors that have now changed the mind of the Bar Council of India.
And in the end, we talk about the parliament, which was adjourned yesterday yet again for the 6th consecutive day. This happened after the ruling BJP continued to demand an apology from Congress leader Rahul Gandhi over his alleged anti-India comments, and the opposition demanded a probe into the allegations of fraud against the Adani Group. Here is Speaker Om Birla addressing the Lok Sabha over the sounds of sloganeering.
क्यों नारेबाजी कर रहे हो भाई? सदन चलने दीजिए. क्या है नारेबाजी क्यों कर रहे हो? मेरा तो आग्रह है, आप सदन चलने देंगे तो मैं सदन चलाऊंगा. आप अगर सदन नहीं चलाना चाहते तो सदन की कार्रवाई 2 बजे तक की स्थगित की जाती है.
For context, earlier this year the investment firm Hindenburg Research had made serious allegations of fraud and stock manipulation against the Adani Group, which had also led the shares of the company to fall sharply. The opposition since then has been demanding that a joint parliamentary committee should be formed to investigate this issue. Meanwhile, the BJP right now is demanding an apology from Rahul Gandhi because during a lecture in the UK, he said that the Indian democracy is under attack and that several politicians, including him, are under surveillance. This is what the BJP is calling anti-India. Yesterday, government sources told Indian Express's Liz Matthew that the BJP will continue to demand an apology and is unlikely to reduce pressure on the issue. And when we had spoken to Liz on this podcast, she had told us that the BJP feels that this Modi versus Rahul narrative will help the party in the upcoming elections in Karnataka, Madhya Pradesh, Rajasthan and Chhattisgarh. For the past few weeks, we have seen a number of BJP leaders speak out against Rahul Gandhi, including Union Minister Hardeep Singh Puri, who said this during a press conference yesterday.
Now, if any individual, a private citizen, goes outside the country or inside the country, he has a freedom to speak. But along with that freedom to speech comes what I call the need to have a sense of responsibility. And to begin with, I think you need closure, and the closure will only come if he apologizes. And he should apologize categorically, unequivocally.
You were listening to 3 Things by the Indian Express. Today's show was written and produced by me, Shashank Bhargava, and was edited and mixed by Suresh Pawar. If you like the show, then do subscribe to us wherever you get your podcasts. You can also recommend the show to someone you think will like it, share it with a friend or someone in your family. It's the best way for people to get to know about us. You can tweet us at Express Podcasts and write to us at podcasts@indianexpress.com.